present about question 1A. Compute goodwill or bargain purchase on acquisition of Eksesi Berhad, Tayub Berhad and Gulsen Berhad. Eksesi Berhad, consideration transferred 320, NCI 133.2, the total is 453.2. Fair value of net asset, ordinary share capital 350, ARR 36, retained profit 58. The total is 444. So there will be a goodwill of 9.2. The impairment of goodwill is 20%. So the impairment is 1.84 million. The net goodwill is 7.36. In Tayub Berhad, the consideration transfer 110, NCI 32.8 million. So the total 142.8 million. Fair value of net asset, ordinary share capital 100 million, ARR 25 million, retained profit 39 million, total 164. The bargain purchase is 21.2 million. In Gulsen Berhad, the indirect consideration transfer 42, NCI 25.7, the total 67.7. Fair value of net asset, ordinary share capital 30, ARR 8.5, retained profit 19.9, the total is 58.4. The goodwill is 9.3. Question 1B. Calculate gain or losses arising from second acquisition of shares in Tayub Berhad. Cost of acquisition 11.2, fair value of net asset, share capital 100, plus retained profit 39.8, ARR 25, the total 164.8. Increase in shareholding of 10%, so 16.48%. The cost of investment 11.2 minus 16.48, so there will be a gain on second acquisition of 5.28. For investment in associate Nars Berhad, the cost of investment 15, gain of shares of profit 2.9 minus unrealized profit on sales of good 0.1. So the post acquisition retained profit 2.8 times 30%, 0.84. The impairment of investment 0.05. So the share of profit post acquisition 0.79. The carrying amount of investment in associate 15 million plus 0.79 million, so 15.79 million.
Moving on to the schedule form for computing the group retained profit and NCI. As you can see, the increase in shareholding obtained from B needs to be deducted in the NCI. Same goes to the dividend paid to the NCI. Meanwhile, the investment income from Gulsen needs to be deducted because it is already included in the retained profit of XCC. The dividend paid is added because it needs to be apportioned between the group and NCI. The preference share capital dividend paid needs to be deducted and added again later because it does not need to be apportioned. The full amount is transferred to the NCI. Next, as you can see, Tayub's retained profit balance PD is taken on 1st July 18 and not taken on 30th June 19. This is due to the second acquisition of Tayub by Taliban. Therefore, the retained profit on 1st July 18 after adjustment is apportioned 80% to group and 20% to NCI. Later, the profit after tax for the year 30th June 19 after adjustment is apportioned 90% to group and 10% to NCI. Lastly, the gain on second acquisition which was computed in B is added in the retained profit of Taliban.
Next, I will present regarding SOPL. First, we will look at the calculation of revenue to be put in the SOPL. So for the revenue, the adjustment that we should make is the subtraction 20 million and 10 million from revenue, and that transaction refers when Taliban sells good to SCC amounted 20 million and Taliban sells good amounted 10 million to Tayub. In the question, it is stated at additional information, intercompany sales and purchases. So for cost of sales, the adjustment that we should make is minus the 20 million and 10 million, because that transaction refers to intra-sales of goods, which Taliban sells to SCC and Tayyub. Both the transaction sale of goods between Taliban with SCC and Tayyub have unrealized profits, since at the end of financial year, the good is still at SCC and Tayyub and you're not able to sell to third party. So the calculation of the amount I've already put in the slide. You can see it here. This is how we calculate the URP for Tayyub and SCC for sales of goods. So next, we will the reason we are using the percentage of 25% for calculation of profit, because it is stated in the question that Taliban Group and its subsidiary always sells or charges its service at a markup of 25% on cost. So we'll get the gross profit amounted to 101.2 million after we subtract the revenue and the cost of sales. Result of PPE, the adjustment is a subtraction of 4 million and 1.5 million. The 4 million will refer to the transaction which Taliban disposed its machine to Gusan, and it is already stated in the question that from the transaction of disposal between Taliban and Gusan, there is a profit of 4 million, and another 1.5 million is from the transaction of disposal motor vehicle from Tayyub to XCC. Both the profit needed to be subtracted because that is the intra-transaction. Next, for the investment income, there is a need to subtract all the intra-transaction. There are 3.64. That is the dividend received from XCC to Taliban. 4.5 million dividend received from Tayyub to Taliban, and 1.6 million is dividend received from Gusan to XCC. Another 1 million is the amount of interest debenture received Taliban from Tayyub. SOPL, Madam can see here the expenses is 39.7 million. It is after the adjustment has taken place. That is, the company need to subtract 0.3 million, 1 million and another 1 million. The amount 0.3 million refers to over depreciation of motor vehicle during Taliban disposed the motor vehicle to SCC. 1 million is referred to another over depreciation during Taliban disposed a machine to Gusan. The last 1 million need to subtract from the computation of total expenses, because that amount is referring to amount of interest debenture paid from Tayyub to Taliban. The impairment of goodwill is referring to the goodwill of SCC. We need to subtract the impairment of goodwill amounted to 1.84 million. The calculation is here. Next, we will add the amount of share in associate amounted to 0.79 million. The calculation has been explained from Najwa earlier. So before we apportion profit between the group and NCI, the profit needs to be minus with taxation, so that we will get profit after tax amounted to 47.01 million. The total of taxation is 21.2 million. Since there is a revaluation of property during SCC acquire Gusan, so we need to add up the increase in revaluation to get the total comprehensive income. The amount of 0.5 is the increase in ARR during the acquisition, and the 0.25 million is increase in ARR at the end of financial period, that is 30 June 2019. King 1 is the calculation for the NCI. For SCC and Tayyub, if you can see, there is an adjustment need to be made. If we see at SCC Berhad, we subtract the PSC dividend because Taliban did not acquire any preference shares, so we need to multiply it with 100% because it totally belongs to NCI, and the balance will be multiplied with the percentage of NCI. That is 30% for SCC and 10% for Tayyub. For Gusan, we can simply take the profit after tax amounted to 9.1 million to multiply it with the 44% to get the amount for NCI, since there is no adjustment. The total profit after tax for the NCI is 13.74 million, and for the parents is 33.27 million. Comprehensive income, the calculation for the portion of NCI is 13.74 at with 44% times 0.25. We only take into account the increase in ARR amounted to 0.25 because it occurred at the end of the financial period. For the 0.5 increase in ARR, we do not take into account because it occurred during the acquisition. So for the parents is the 41.91 million.
For SOCID, balance brought down for group and NCI is calculated as per working 2 and 3, and the acquisition during the year for Gusan in NCI is as per working 1. Profit for the year is taken from SOPL, and for the dividend of the ordinary shares and preferred shares need to be subtracted from both group and the NCI, and then the indirect consideration transfer need to be subtracted from NCI, and the increase in shareholdings for the second acquisition on Tayyub Berhad. The gain on acquisition need to be added in the group, and the fair value net asset need to be subtracted from the NCI. For the revaluation of freehold land in Gusan, need to be prorated in NCI and group asset revaluation reserve. So the balance is as per shown of 222 million 103.05, 244.81 million, and 178.14 million. In working one, we calculate the profit for the year for the NCI in XCC Berhad. The profit after tax is subtracted with the investment income in Bursa Berhad and minus with the preference share dividends, and which all the preference share dividend will go into the NCI, and the total of 11.8 million will be multiplied by the 30% of the NCI shares in XCC Berhad. And then for Tayyub Berhad, the profit after tax is subtracted with the URP on the motor vehicle and added with the over depreciation on the motor vehicle, which the total will be multiplied by 10%. And for Bursa Berhad, the profit after tax is multiplied by 44% of the NCI shares, and the total will be 30.74 million to the NCI for the year. For things to calculate the balance breakdown for the group, for Hobbies, we need to add the retained profit with the bargain purchase, and for subsidiary, we need to minus the retained profit with the pre-acquisition retained profit, and the balance will be multiplied by the percentage of the group holds, which in XCC 70% and in Tayyub 80%, and the total will be 203.5 million. For working street, we calculate the balance breakdown for NCI. For post-acquisition of XCC, we multiply 2.8 with 30% and we get 0.84 million, and for Tayyub 0.8 times 20% and we get 0.16 million, and the non-controlling interest for XCC ordinary share capital and XCC preference shares and Tayyub as per mentioned in the schedule previously, so the total will be 247 million.
For CSOFE, for the PPE, we must include all the holding and subsidiary portion and eliminate any unrealized profit from the sales of machinery and motor vehicle, and also include the over depreciation and under depreciation. For the investment in subsidiary and associates, we must eliminate the intra-group investment, and also for the associate. For the receivable, we must eliminate the intra-group trade receivable, which is minus 20 and minus 5.4, which is cash in transit, and also the remaining balance of 4.6. For the inventory, we must eliminate the unrealized profit from the sales of intra-group transaction, which is minus 3 and minus 1.8. And we must also include the cash in transit of 5.4. For the goodwill, we include the goodwill from the acquisition of Tayyub and Gulsan, which will bring the total assets of 2,168.3 million. For equity and liabilities, for OSC, we must include 11.2 as it is the issuance of new shares for the acquisition of Tayyub, and we only take the holding portion for 6% PSC, which is 100, and for the group we take the balance CD from the Sochi, and for the ARR we also take the balance CD from the Sochi and also for NCI. For 8% debenture, we must eliminate the intra-group debentures, which is 12.5. For the payable, we must eliminate the intra-group payables and of 20 and 4.6. This will give a total of equity and liabilities of 2,168.3 million.
Moving on to answering the question for 2A. A joint arrangement is an arrangement of which two or more parties have joint control. A joint arrangement is either a joint operation or a joint venture. A joint operation is a joint arrangement whereby the parties that have joint control of the arrangement have rights to the assets and obligation for the liabilities relating to the arrangement. A joint operator shall recognize in relation to its interest in a joint operation A. Its assets including its share of any assets held jointly. B. Its liabilities including its share of any liabilities incurred jointly. C. Its revenue from the sale of its share of the output arising from the joint operation. D. Its share of the revenue from the sale of the output by the joint operation. And E. Its expenses including its share of any expenses incurred jointly. A joint venture is a joint arrangement whereby the parties that have joint control of the arrangement have rights to the net assets of the arrangement. A joint venture recognizes its interest in a joint venture as an investment and shall account for the investment using the equity method in accordance with FAR610 investment in associates and joint ventures, unless the entity is exempted from applying the equity method as specified in the standard. Moving on to joint control. Joint control exists where the parties contractually agree to share control of the entity, and the decisions about the relevant activities of the joint arrangement need to have the unanimous consent of all the parties sharing control. The parties have to assess the extent to which the parties should act together to direct the activities that significantly affect the returns of the joint arrangement. No single party controls the arrangement on its own, but a party to joint control can prevent the other parties from controlling the arrangement.
For question 2b, the answer is incorrect. It has been stated in the Agreement of Arrangements that any decision should be made with 75% consent among the shareholders. However, the combination of Mesa and Linda only amounted to 70%, which did not fulfill the agreement.
Question 3A. Explain whether relationship between Gasu Berhad and Impiana Berhad have changed after the disposal. The relationship between Gasu and Impiana Berhad have changed after the disposal. Before the disposal, their relation is parent and subsidiary, as the controlling interest is 80%. After the disposal, the shareholding of Gasu in Impiana reduced from 80% to 44%. 44% is obtained by subtracting 80% from 36%. Gasu Berhad has lost control over Impiana, but still have significant influence over Impiana. Therefore, the relationship between Gasu and Impiana have changed from holding subsidiary relationship to associate, as Impiana is now considered as an associate of Gasu.
The consideration transfer is 58 million and the fair value of net asset is 45 million. The NCI of 20% is multiplied by the 45 million, which amounting to 9 million, and the total consideration is 67 million. 67 subtract by the 45 million have a total of goodwill of 22 million, and minus the impairment of 8 million mentioned in the question, thus we will have goodwill of 14 million. Next, to calculate the gain or loss on the disposal of the shares for Gasu Berhad Group, the sales proceeds of RM95.8 million need to be added with the fair value of the remaining investment, which is 44% times with 10 million units of ordinary shares multiplied with the fair value of the shares, which is RM9.3 ringgit, and the total will be 136.72 million. For the fair value of net assets, 145 million needs to be multiplied with 80%, which will total up to 160 million, and the remaining goodwill calculated previously need to be added, which is RM40 million, plus the difference between the 136.72 million and the 130 million will have gain on the disposal of 6.72 million.
In the consolidated statement of profit or loss, Gasu Berhad shall consolidate Impiana Berhad until the date of disposal, which is 1st January 2019, as Impiana was still a subsidiary to Gasu Berhad. After the disposal date until the end of the accounting period, as at 30th June 2019, Gasu Berhad shall recognize its share in the profit after tax of associate, as Impiana Berhad is now an associate company to Gasu Berhad. In the consolidated statement of financial position, Gasu Berhad shall no longer consolidate Impiana Berhad as at 30th June 2019 and shall apply equity method to recognize its investment in associates or at the carrying amount of non-current assets. Control exists when an investor has all three elements, which are power over the investee, exposure or rights to variable returns from its involvement with the investee, and the ability to use its power over the investee to affect the amount of the investor's return. An investor has power over an investee when the investor has existing substantive rights that give it to the current ability to direct the relevant activities. For example, an investor holds majority of the voting right of an investee. However, an investor can also have power even if it holds less than a majority of the voting rights of an investee. An investor can have power with less than a majority of the voting rights of an investee through a contractual arrangement between the investor and the other vote holders. Rights arising from other contractual arrangement, the investor's voting rights, the potential voting rights, and any combination of A to D. In this case, Amari has a direct control on Niona Berhad and Mir Berhad since 1st July 2018 until the financial year end as at 30th June 2019. Since the size of Niona Berhad's voting interest in Kari Berhad on 1st July 2018 is 25%, it indicates that Niona Berhad does not have power over Kari Berhad. Kari Berhad is only an associate company to Niona Berhad from 1st July 2018 until 30th March 2019. However, since April until the financial year end as at 30th June 2019, Kari is now directly owned by Niona Berhad as there is a change from an associate to subsidiary company as the direct interest is now equivalent to 85%, which is 25% plus 60%. After the new acquisition, all the three companies are ultimately owned by Amari Berhad. As at 30th June 2019, Amari Berhad has a direct control in Niona Berhad of 70% and Mir Berhad of 65%, and indirect control in Kari Berhad of 59.5%, which is 70 times 85%.